The Standard & Poor's 500 dipped by 19% in 2022, but stocks still don't seem cheap to Charlie Munger, Warren Buffett's billionaire partner at Berkshire Hathaway. In my whole adult life, I have never hoarded cash, waiting for better conditions, Munger said in late 2022. I just invested in the best thing I could find. Yet he acknowledged that Berkshire Hathaway is sitting on billions of dollars in cash. The reason isn't that Buffett and Munger think they can wait for stocks to get even cheaper, the wager known as timing the market. Berkshire Hathaway and every other major name in finance is somewhat limited in what it can do. By law, major financial institutions and billionaire investors can't buy more than 5% of a company without submitting a 13D filing as a beneficial owner to the Securities and Exchange Commission and all the headaches that come with it. This essentially shuts Buffett out of the world of micro-cap investing, and even if the company chose to do so and uncovered a 10 times opportunity, the upside would be barely noticeable to Berkshire Hathaway. If a $2 million stake turned into $20 million, that wouldn't move the needle for a company that collects hundreds of millions of dollars in dividends each year from its stake in Coca-Cola alone. But for ordinary investors, it's a different story. The world of startup investing, legally closed to everyday investors for decades, is now open to the masses. Companies like Start Engine, for example, allow everyday investors to invest small amounts in high-growth startups, potentially capitalizing on the high-risk, high-reward nature of startup investing. Investors can invest small amounts in a diverse number of startups, and even one big win can be a substantial boost to someone's portfolio. With hundreds of startups on these equity crowdfunding portals for investors to invest in, including Start Engine itself, investors can choose from some of the top startups in the country, backed by the world's best venture capitalists.